Very good morning, everyone. So it's been an quite a long time. After that, we are meeting again after a very long week. Very confused markets. If you feel that markets are very and highly confused, then I would say like this session is definitely for you. So where a lot of basic confusions will get cleared in this specific series. So this is a part two of the series, and this is going to be the final series as well. And I would like to start with the basic question. Many people have this very basic question, particularly the traders who got used to indicators, right? And then they started using order flow. They have the very first question is like, is order flow is more of an leading indicator or is it more of a lagging indicator? Because people want to know, right? Because they would have learned that there are a couple of indicators like EMA, RSI. They'll be looking into the past data, right? So I would say like talking about order flow, it is neither leading or it is not lagging. It talks about what is happening right now in the markets, who is more aggressive, whether the participants are winning the auction or not, where the absorption is happening, where the exhaustion is happening. You can see it as it happens, right? So I would say like order flow is more of a real-time confirmation tool to validate the market structure, to confirm the breakouts. Yes, many places you can confirm breakouts, many places you can confirm the traps, many places you can confirm the absorption patterns, right? And order flow is more of a cause, and the end result is nothing but the price action. Both simultaneously, you can visualize in the live markets as the market started happening, right? So there is no post-mortem study over here. Most likely, it is more of an live analysis and live. Uh, Probably you have to start adopting reading the markets live, right? So which means you need decent screen time experience is what it is required. At least probably in months of screen time, you will be having an basic comfort in handling order flow, or maybe in 3 months of time of screen time experience if you're having, probably your skill get enhanced a lot. And more the time that you're going to observe order flow, right, the more you will be getting comfortable in reading the pulse of the markets. And there is also many people's question is like how order flow is different from price action. I'm a price action trader, like how it is going to help me out. If you ask me, right, the order flow provides more context than the traditional price action. Traditional price action, what it shows, so you can see only the open, high, low, close of the candle, how fast the price action is moving. Of course, you can see that whether market is crashing or probably there also you can find the concepts like trap or the setups like confirmed breakouts. But there it is more of an ideology, whereas here you can see the numbers, you can visually, you can experience those numbers, right? In case of order flow, you can say like price is breaking the resistance. Okay, you can say like candle is looking strong, or maybe it is hitting the supply zone or demand zone, right? The whether the move is looking strong, how the close is happening, and is the how the reversals are happening, how the trap is set up. That is what the traditional price action talks about it. Right? Of course, it also talks about a lot of other things, but talking about order flow, right? Order flow always talks about who is aggressive, who is the passive trader over here, who is winning, whether aggressive traders are winning or passive traders are controlling the price action. Are they creating the resistance? Are they creating the support zones? Right? You can actually see the battle happening between the buyers and sellers. And there are many places, many important zones, intraday zones, like stacked imbalance or delta reversals, uh, delta divergence, or is there any exhaustions are happening where the high delta is happening, where the trap is happening, where the liquidity is drying out, like one form of exhaustion. We call it as like thin volume exhaustion. We'll be talking about that. And where the stop loss hunting is happening. So a lot of things order flow talks about it, which is very difficult to observe through the eyes of price action. In order flow, you can see the price action also. You can also see the participation also, right? So price action clearly shows what happened or what is happening, and order flow explains why it is happening, right? Order flow explains, oh, there is an absorption is there, that's why the price is reversing. There is a trapped activity is there, that's why the price is reversing. There is a strong breakout is happening. I'm seeing in the form of COT levels, back-to-back COT levels. So you can confirm that yes, it is a strong breakout. You'll be able to validate through the numbers, right? So probably in price action, you can only experience or you can only feel it, but here you can also feel it, plus you can statistically see those numbers as well. How aggressive the participants are, you can able to see through the numbers, or how crazy the exhaustion is. So order flow is all about evidence-based trading. So means we see the order flow structure, we try to derive the context. We don't predict in the markets, we just simply react to the setups, so that we don't have any opinion in the markets. It doesn't matter whether the people are having a bullish opinion in the markets or bearish opinion in the markets. Order flow doesn't care about it. What order flow always cares about is like what pattern it is, how I should react to that setup when it is happening during the live markets. After markets, we don't have any thoughts what the market is looking like. Some information, very few information we carry forward, very few information, right? But majority of the time, you see intraday, come intraday, trade intraday, go intraday, and nothing else. We don't carry forward anything else for the next day. I said some information we carry forward, some commitment zones or some smart commitment zones. So these are the informations we tend to carry forward. Rest other things, if you would have seen market profile, lot of details we carry forward for next trading day. But in order flow, every day is a new day for you. Every day it throws a lot of detailed context. During live markets, market shows the context. Only live market shows the setups. So there is nothing, literally nothing to predict in order flow. So you have to wait for the setup. When the setup is forming, you know that you have to understand the principles of order flow, and then you have to only react to the order flow, right? So I'll show you some of the examples what happened last couple of days, right? So when to trade, you should be trading whenever there is an aggression is succeeding, like when buyers are dominating or sellers are dominating in the markets, or when you are able to confirm that yes, the absorption is confirmed or the trapped buyer is confirmed. So those are the places you should consider trading. When you don't see any patterns, absolutely you should have to stay away from the markets. Or probably I would say, like, sometimes, right, market will be showing dull, boring price action, consolidation kind of patterns will be happening. Low volume activity, dull, boring setups, low aggressiveness in the markets, or I would say like low confidence in the markets, that generally we evaluate through market profile. When such kind of places, right, you should avoid trading in such kind of situations. And when markets are getting extremely impulsive, right? So those are the places the setups tend to form many times, and price goes to crazy levels, and then it usually comes up with trend reversal setups most of the times. So order flow itself, nothing but what? Evidence-based trading. Opinion doesn't matter, right? So it doesn't matter what you are thinking about markets. It doesn't matter what analysts are thinking about markets. It doesn't matter what I am thinking about markets. So end of the day, what is showing in front of you, what data you are seeing with your visual eyes, right, is what kind of setup it is. Where I have to keep a stop loss, where I have to target. That's the only thing that we tend to focus on. Maybe if you are having an idea about price action or market profile, definitely it's an add-on, right? So that let's say in price action you are having some pattern which is saying that it's a trap or something like that. In order flow, you can use it to validate. You can see those real evidence. Is that real evidence is there happening or not? Right? In price action, right? You can only have theories, right? Is that theory is playing out or not? That evidence you will be able to arrive from the order flow charts. And almost prediction is an opinion, right? So everyone has their own prediction, right? Where the market will go, or why the market is going up, why the market is going down. Everyone have their own set of predictions. I have mine, you have yours, and that's what it makes the market, right? That's what it makes buyers and sellers every single second. People have opinion. That's why every single second the opinion keeps on changing in the markets. Maybe 1 week back, if you would have seen that, you have a different opinion. Now you have a completely different set of opinion. Maybe another 3-4 days, or maybe even Monday, your opinion might change. Opinion keeps on changing, but setup always remains the same. So in today's setup, we're going to talk about a couple of order flow principles. One of my favorite principles is like exhaustions in the market. See, exhaustion is one form of an auction market theory concept, right? So whenever the price is keep on moving very aggressively, at some point in time, what happens is like the market tend to exhaust. Some exhaustion usually happens with thin volumes, right? You will be seeing a like low volume at the extremes, but those are like very interesting setup zones, particularly if it's happening at the top or even if it is happening at the market bottom. You could be able to convert that into a trading setup. Even last Friday also there has been an thin volume exhaustion happened. We tend to call that as a like kind of a weak secure low. Let me try to pull up the charts and show you what really happened on last Friday. Hope you guys are able to follow with what I'm saying. Am I clear, or you have any doubts so far, whatever we had spoken? Okay, Anand Kumar says clear. How about others? Rakshit says we are good. All right, great. Let's move a little. So this is what happened on last Friday. So last Friday, price has been keep on dropping down. As you can see, like price keeps on dropping down at the extreme lows, right? So there are a couple of lows it had made. If you go back and see each and every single lows, you'll be finding something very interesting. So this low, if you would have seen that, it is having some sort of an trapped activity, like kind of not trapped activity, but some sort of a genuine buying sort of thing was happening. Some mini pullback happened. It was a fresh low. When it comes to order flow, right, there are two kinds of highs and lows. It matters. One is fresh high, fresh lows, intermediate swing high, intermediate swing lows. So those are the places we tend to look for reversal opportunities. Another fresh low is getting made over here. You can see like how thick the activity is. This is one form of an absorption activity here. Later on, we'll talk about absorption because delta is getting bigger, volumes are getting bigger. High density clusters of selling activity is happening over here. So it is kind of a trap setup, right? So usually it's kind of a trap setup, and suddenly the buyers are taking control of the markets over here. This is also a very interesting low for me. You can trade some quick long trade setups. So what it is saying here is, it's saying that this zone probably having a huge liquidity, some sort of liquidity has been there. The zone is floated with some sort of a liquidity zone. A very interesting liquidity zone is what I can think of. So means a lot of limit orders are acting like a kind of a shock absorbers. So that's why the immediate quick move is happening, and that move is like kind of a reasonable move. 45 points, 40 to 45 points of price action over there is happening. A little more than that, right? So to any extent, I will consider this selling pressure, because you don't get to see this kind of stacked selling everywhere else. This is kind of one form of an absorption. It is happening at a fresh day low. Maybe if you would have seen the candlestick charts, it was breaking the day low. You can see that it's breaking the fresh day low. It is breaking, and then whenever it's a fresh day low is getting broken, you are seeing an absorption. Maybe I'll try to explain this with a diagram so that you can get the context. So always it's good to go with an whiteboard session. So the mini trap was set over here. Let's say like this is a zone. Market is forming a bottom formation. So market has been keep on sliding down. Imagine that market has been keep on sliding down. And first time we had seen some sort of an pullback, right? A mini pullback, not a great pullback, but a mini pullback. But second time, when the price is coming and breaking down, what you are seeing is like great absorption. So we are seeing a kind of a simple absorption is what we are seeing over here. So what is absorption? When a new low is happening and you are seeing an absorption, what you need to wait to do is like you have to wait for the price action to do some sort of a breakout above that previous candle where the absorption is happening. So that thing will create an quick pullback. So it could create some quick long trading opportunity, but that absorption is one form of a trap in the markets. That's kind of a trap in the markets. Very interesting trap it is. You can see this kind of trap, right? So many times the breakouts doesn't succeed. If at all every breakout is going to succeed, right? Every swing trader and every trend following trader is going to make money in the markets. Breakout failures are very common, right? So we are also seeing some sort of a mini breakout failure kind of from the order flow perspective. But what is the evidence here? The evidence here is the absorption. The absorption is the pattern which says like you have to look for the quick long trading setup, maybe something like 25, 30 points or 40 points. That's the max, right? Because the volatility came down, markets are not that crazy anymore, but reasonable craziness is happening, but not on a daily basis, right? But still, the absorption pattern, if it is happening, that to this level of absorption, if it is happening, you can see like I want you to go back and watch last couple of days order flow charts. You could have never seen this level of intensity in 4 consecutive blocks, and that too at the same candle, buyers taking control of the markets despite big negative delta, right? So despite big selling pressure, the buyers are taking control of the markets. Now what does that means? That's what an absorption looks like, right? That's what an crazy absorption looks like. And probably the high of the candle and the low of the candle are going to be an interesting reference, and this zone is going to be an area of importance, right? Because this is a zone smart buyers. So who are the smart buyers here? Who are the smart buyers? So you see like sellers are there, they're getting trapped. So who are the sellers and who are the buyers in terms of orders? Anybody? Who's more aggressive? Who is smart over here? Limit order. Yeah, buyer is a limit order. Yes. Chaya Panchal says correct. The sellers are the aggressive sellers are there. They're getting into a trap, right? So how they're getting into a trap? Because many traps are set around the lows or highs, right? So usually it's kind of a trap. When the price is breaking the downside, the buyers are coming and absorbing, right? So who is absorbing? Buyers absorbing the sellers. Buyers absorbing the sellers. That's the most interesting one. All right, so what happened? Again, something more interesting is happening. So price went up to a reasonable extent, some From there, some 40-50 points it went up, quick moves. But again, price is coming and breaking down, right? So again, coming and price is breaking down. You see that this time, the price is breaking down. But if you could see the volume activity over here, completely less volume activity. And you're getting some sort of an ultra thin volume bars. And again, price started going sideways. More sideways is what we've been seeing over here. Right, so more sideways. These are the markets one should tend to avoid these kind of situations. Yeah, price action is keep on going up. Price action keeps on going up, but then something very interesting is what it is happening over here. So what again happened over here? What again happened is price one more time started getting back down. In fact, another fresh low. There was a fresh low here. This fresh low got taken down. Oops. It got taken down and it again turns out to be a trap. This time probably the volume was very thin, not very thin volume, but I would say like kind of moderately thin volumes. We don't really call that as a kind of a setup, but kind of a thin volume. Did I would have traded? If you ask me, definitely no. I would have traded this because there's a clear-cut setup. This is also one form of an price is attempting to break the low and then a pullback. One more, again, a sort of a breakout failure is what it is happening, not succeeding the breakouts, right? How do we know that it is not breaking out? That's what the most important thing. If you again go back to the previous places where the day low, let me mark the first low it formed over here. This is a low formed here, right? So this low, the price was, let me put slightly a little bit down so that will be easy to identify. So the price went 4 TPOs down below that, right? So getting back up, looking into the volume, nothing much. Is that a completely a thin volume? If you ask me, yes, it is. Buy side is having thin volume, but sell side is like kind of 161. Generally, if all the lot size are less than 100 lots, we call this like something like an ultra thin volume bars, like kind of a weak secure low. But this is like 161 is there. It's fine, but still the volumes has been very lesser. And then price able to manage to pull back over here. So whenever the price is breaking down, we can also see how aggressive the sellers are. So we'll be looking into the COT levels as well. The COT levels are saying like aggressive selling pressure is happening when it is breaking down the fresh lows. But the next bar, it is not doing those things. It is not that great in doing those things, right? So probably we called a like kind of an COT failure here. A COT failure is happening. So when the COT failure is happening, right? So what does that mean? Is like the sellers are still not serious. That's what it means. Sellers are not serious. So probably this candle here, if you would have seen that the CR is like 12, maybe anything more than 2, we can call this a serious selling pressure. But whereas the subsequent one, if the sellers are serious again, if you ask me, absolutely no. So two back-to-back COT levels, if you're comparing, you'll get to know whether the sellers are serious or not. It's not serious, means something else is going to happen, right? Maybe definitely not a confirm, it's not a strong breakdown, but it could be something else. But if you keep going, you'll be finding like a lot of thin volume activity. Volumes has been keep on running dry, nothing much. You should not be doing anything in these kind of places. But something crazily interesting happening when the price is breaking the VWAP levels. You can see that price is breaking the VWAP levels, and subsequent candle, you're seeing a huge volume activity, 618, right? And that candle, even if you would have seen that here also, I'm having like 592, but price is continuing its auction. But this auction is having a high volume activity, and that candle low is getting taken down. The candle low is getting taken down. So that is an area of importance for me. Again, that is one form of a trap set by the market participant. We call that as like kind of a trapped buyer. Buyers are getting into a trap because it is an intermediate swing high. Intermediate swing high in the sense you should be watching the highs and lows. So even this bar is also an intermediate swing high. What difference between this bar and this bar is like this bar high is already taken out. If you would have taken a high of this candle, the high of the candle has been taken out. The 2 o'clock candle high is taken out by the 2-5 candle high. However, this high, if you would have taken, this candle high is not taken out. Rather, the low of the candle has been taken down. So that confirms that the evidence of trapped buyer here. Remember, order flow is more of evidence-based trading, right? So number one, we are seeing an intermediate swing high. Prices keep on moving intermediately. Price was recovering from the bottom, right? And there has been a crazy buying pressure has been there. So the buyer has been there. Big buyers has been showing up. Big single price action buyers also showing up back to back, right? But this is where the evidence is getting confirmed. Evidence is not confirmed in this candle. The evidence is confirmed that this is a trapped buyer in the subsequent candles. So probably 210 candle, the evidence is getting confirmed that it is a trapped buyer. And that's a quick shorting opportunity, right? That's a quick shorting opportunity. Market also prepared quickly to the downside from there. Like, but then the one which happened at the 3-5 is like nobody would have anticipated that. There has been a crazy amount of stop hunting is happening. Now you see that the difference is, I would like to explain this over here. Now what really happened is like price kept on keep going higher. It again formed a trapped activity. It's a trapped activity, trapped buyer. Trapped buyer, and market started reversing from there. When it is reversing this time, right, there is no thin volume activity, there is no absorption, straightforward there has been a drop. So what does that mean? So what does that mean is probably there has been a good amount of liquidity which was floated. See that there is a first low, second low, and third low. This is a zone where we had seen an liquidity would have been there, and that liquidity zone is getting broken down. Like it's broken down because there has been a kind of an order flow sweeping is happening. Order flow sweeping or a stop hunting, you can say whatever it is. Stop hunting or order flow sweeping. Order flow sweeping is like kind of an algorithm which will be taking out all the liquidity. Wherever there is a liquidity is there. Let's say liquidity will be there in batches. So it's keep on hunting all the liquidity. Wherever the liquidity is there, it's been keep on hunting and hunting and hunting and hunting and hunting. Who does that? If you ask me, typically institution does that, right? Because a normal small trader cannot make this level of impact in the markets with that kind of quantity or that kind of intensity, right? A normal trader generally they tend to avoid doing those kind of things. I mean, they cannot do it because they don't have unlimited money supply. Most likely a prop traders can trigger it, or an institutions like FIDIs, they can trigger this kind of liquidity moves. Or if there is any news-based panic happened in the markets, right? If at all, if it is happening, then yes, a crowded reaction, a crowded stop loss is getting hunted, then this kind of emotions are very much possible. Sometimes it could be an emotional selling also, emotional selling or emotional news-based selling. All of a sudden, the news would have been arrived. So because of that also, this kind of sudden trigger, a sudden panic in the markets can happen. But one thing which is clearly happening, it is hunting the stops. What are the traders who are traded over here, over here, over here, right? So whatever the trap it has been set in the markets, every trap provided an opportunity undoubtedly, but finally the trapped buyer, whatever the reversal has been happened over here, it turns out to be, when this time when it is taking down the lows, it is not taking down one by one. It's been very intensive, very aggressive, and that aggressiveness you would have been seen right from the start till the end. Looking at the delta itself, you can see like 3,198. 3,198. Now, this is kind of a stop hunting. Many stop hunting, how it will look like, I'll tell you. Majority of the time, let's say you can find this kind of something called equal highs or equal lows. Sometimes it will be forming an high, again it forms an high, right? It forms two consecutive highs. Let's call this like kind of an equal highs over here. We can call it like kind of an equal highs. Generally, when next time the price is taking out, it takes out with a stop hunting. It takes out with a stop hunting. And later on, if you would have seen the pattern, right, they'll be slowly dropping down, slowly, not in a very intensive manner, but they'll be slowly dropping down. And at times they'll be getting faster later on. But that'll be like kind of a mini stop hunting, because there'll be like some sort of resting orders will be there in this zone. So this is the zone where you can find some clean resting orders, and those orders are getting completely filled, right? So it brings such kind of an potential price action around those levels. You're finding the resting limit orders. Now, this kind of stop hunting is quite common, right? So they do a stop hunting, and then after that, the market will be on its own. When that stop hunting is happening, you will be witnessing an high volume activity, high delta, high volume, and high delta, or crazy amount of stacked imbalance, sometimes stacked imbalance. Like you'll be seeing a crazy amount of stacked imbalance, not a regular stacked imbalance. The one which I the one which I showed you is a regular stacked imbalance. The one which is happening over here, this is something very rare, but this is not a stop hunting. This is slowly happening. Slowly market is recovering back. This is absorption. This is a classical absorption pattern. Of course, yes, here also delta is heavy, right? So, but still this is more of an absorption. This is also stacked imbalance, but this is not, the aggression has been controlled over here and buyers are taking control in the markets. Whereas if you would have seen this one here, the aggression in the live markets itself, if you would have seen, right? Or you just go back and play that, continuously one side you are getting a lot of zeros. So means there is no buying pressure at all. Only the sellers are the one who is taking control of the markets. Looking into the delta activity like 66, yes, high intensity selling. Look at the amount of selling pressure, like a lot of selling is happening, mostly initiated selling, and that is also triggering a lot of other people who are already bought, right? Once you're a buyer, next you have to be a seller, right? So your stops will be at like, many people's stops will be kept around like day low plus 5 points, day low plus 7 points, or day low plus 10 points. Continuously aggressive selling pressure has been keep on happening. So time is also 3 o'clock. So naturally, many stop loss orders which are floated, many intraday stop loss orders which are floated, all the stop loss market order on the buy side would have triggered. So those buyers would have now converted into trigger sellers now, right? Stop loss, most likely stop loss limit orders and stop loss market orders would have triggered on the sell side, because they are buyers. They would have floated and sell market order to control their stops. So those orders would have been triggered, and that adds up more to the volume. So it cascades one stop loss triggers another stop loss, that stop loss triggers another stop loss. And moreover, exhaustion players also getting aggressive, stop loss is also getting hunted. So it keeps going like some sort of an order flow sweeping, here. A very aggressive one it is. You don't get to see this kind of order flow sweeping every now and then, but when it is happening, you should realize that this is not done by regular trading activity. Some sort of an institutions are definitely involved over here. Generally, order flow sweeping itself done by algorithms. There are you can just search for order flow sweeping algorithm, or you just use ChatGPT, get to know more about it. And subsequent also, you can see that aggressive selling is happening over here. And of course, market's also coming to an end. Otherwise, this is rated as a very good selling, right? Compared to the other types of selling, whatever that we had seen. Those selling is seen as a trap, whereas this selling is seen as a crazy amount of selling pressure by any means. But still, nothing happened. Later on, market went sideways. But still, market's also coming to an end as well. So nothing to interpret from those action. But it's a very good selling. Like from the order flow point of view, this kind of pressure action is considered as an aggressive pressure. But even though I'm seeing some sort of an absorption over here. So there's a 512 over here and 365, and inside bar is breaking out. So some aggressive sellers are, you can see like 532 over here, 512, 365. So high density volumes are happening on both the sides. Look at that, like 343. Generally, high volume density happening on both the sides are very rare. So it's happening in batches. It's happening in the zone, and there's also big buying activity happening at. So some absorption is once again happening near to the end of the day. There's 401 over here, and 512 over here, 532 over here, 343 here, 248 here, 365 over here. Now all these tight bands are saying that again absorption is happening in the markets. Again, absorptions are happening. So maybe if at all, if you would have asked me, definitely if at all, if it is happening during middle of the day, it's a good place to look for an accumulation. But that's also, once again, we term that as like one form of an absorption, right? So let's get back to the context over here. So exhaustion, right? Exhaustion, why it happens? Typically, it happens when price is reaching an extreme, particularly a fresh day high or fresh day low. Sometimes the participants will get dried up, so which will lead to kind of an ultra thin volume activity. Volume declines very sharply and trend reversal happens. The same side, aggressive traders will not be there to defend, so auction stops, and no absorption, no aggressive buying activity, no aggressive selling activity. So simply nobody is interested in that price, and the auction stops there, and trend will start reversing from there. Reversing, or sometimes it might rotate for some time and then it reverses. So if you ask me what is the major difference between absorption and exhaustion, right? So absorption usually happens with high volume activity, high delta. We had seen that couple of examples. We'd seen that, like both two absorptions we had seen on last Friday. Both happened with high volume, both happened with high delta, both happened with strong participation, sometimes with momentum, sometimes with stacked imbalance, right? Despite that, price is getting stopped over there. So that is happening because of the passive orders are taking control of the markets. Whereas in exhaustion, no such thing. It is more of a weaker participation. Absorption is more of a stronger participation, whereas exhaustion is more of a weaker participation, low volume activity, low delta, kind of end of one auction and beginning of another auction, right? Very powerful intraday market tops can be spotted, or some mini trend reversals can be spotted on the bottom setup sometimes because of this kind of thin volume based exhaustions. Now here is the order flow settings. Last week itself, people asked like, can you provide your order flow settings? So this is the order flow setting we've been using for a long period, very long period. I think the setting we've been using since 2016, 17 onwards, right? There's no change in the settings at all. This is more relevant only to Indian markets. Maybe if you are trading cryptos or crude or commodities or currencies, the tick size varies, so the settings also varies. But whatever the numbers which has been provided is applicable only to Indian markets, which we've been practicing for quite some time now. So for something like Nifty, we'll be using like 40 is the value. The 40 in the sense, this is a software control which we'll be keying in our order flow settings. So I'll be putting, I'll be right click and I'll go to indicators. From here, you can see that the brick size, the 40 multiply by the tick size. Tick size by default, many vendors are providing at 0.05, right? So even though exchange tick size has been recently changed, you don't need to worry about that. You can play with the default tick size settings itself. So 40 multiplied by 0.05 is going to be like 2 points. So something like Nifty, which is trading around like 25,000 plus, I prefer to use an 2-point TPO. So 2-point bricks or TPO, you can call it whatever the way you want. But every 2 points, the blocks, the order flow blocks, the footprint blocks will be formed over here, both on the buy side and sell side. And as long as those levels has been, those bins has been, price has been trading in those bins, the order will get accumulated. The market orders will get accumulated in those zones, right? Something like Bank Nifty, I prefer to have like 100 as my software settings, multiplied by 0.05. That will give me 5-point TPO or 5-point brick size. So this 0.05 setting is applicable only to Indian stock markets and futures, maybe BSE or NSE, cash and futures, it is applicable. Generally, I prefer not to apply order flow on the option charts, right? So why we don't apply on the order flow charts is, can't we figure out a smart money if you ask me? See, options, the type of traders is what it matters over here. When it comes to futures, something like Nifty futures or Bank Nifty futures, you can find all kinds of trader, long-term trader, right? And then you can find short-term trader, prop traders, intraday traders, scalpers. Every kind of time frame is active in futures, or even in cash market also. Cash market also more or less same thing. Like cash market also you can find scalpers, high frequency traders, intraday traders, short-term traders, swing traders, breakout failure traders. You can find all class of traders and all time frames of traders. But if you look into the options, what is missing here is the long-term trader will be clearly missing. Only very short-term traders are the one who will be trading. Only option buyer, option seller, and many traders, they don't play for direction, they play for volatility game. So their intention is very different. In case of end of the day, it is still buyers and sellers, but the intention is different. I will be buying an at the money call, but I would have shorted an in the money call, right? So what is the real intention of a 25,600 call option? I don't know. What is the real intention of buying or selling an particular call option or a put option? We don't know, because we don't know whether they are exiting their positions or they are shorting their positions, right? So the intention is not revealed over here. But if it is futures, the intention is very clear. Futures also we can use it as a hedge, but primarily, right, majority of the time, the future intention is for directional price action. So I would prefer not to look into the order flow of option charts, right? Maybe you can try with at the money or slightly in the money, but I prefer avoid looking for smart money concepts inside an options order flow, right? Where you can apply, if you ask me, can I apply in Nifty spot? If you ask me, absolutely you cannot do that. The reason is in Nifty spot, there are no real traders. Real traders trade FNO, right? So index futures is really tradable, not the indices. So if you are looking into the indices, you should use, you should be using Nifty futures, not Nifty index, spot index you should not use. Can I use in Reliance spot? Absolutely, because real traders, they trade Reliance spot also. Shares are tradable, and you can apply on Reliance futures also. If you trade Reliance in cash markets, you look into Reliance order flow in cash markets. If you trade in futures, or even if you're going to trade in options, it's highly recommended that you watch the futures order flow, right? See, end of the day, we are in the markets where futures move the spot and spot move the futures, and both go simultaneously together. Sometime if it is not moving together, it's an arbitrage opportunity. HFT traders are going to find that opportunity, and it's going to get arbitraged out very soon, right? So always spot moves the futures, futures move the spot. Sometimes even options, very rarely, right? Sometimes options move the futures also. Sometimes options move the spot also. A long time back, there is a stock called GameStop in US markets. Option buyers manipulated the stock price. So you just search for GameStop, how the option buyers, retail traders, they went against institutions by buying cheap OTM options. Like they called like YOLO trading. So the fundamental thing is futures move the spot, spot move the futures, right? Very rarely options also can move the indices as well. So there's something called gamma exposure and all those things. I'm not going to go very detail in that, but the context is like option positions impact the spot also. Option positions can impact the future positions also, right? And of course, we know what is an absorption is all about. Large opposing passive orders. We had seen they're like resting orders, comes up with high delta, despite having a big buying pressure over here. In this case, there's a lot aggressive buyers has been keep on buying. Despite having a big buying pressure, price breaks above those levels, and price is getting absorbed by the sellers, passive sellers, and price is attempting to get back down. So it forms a kind of a resistance, or it forms like kind of a support zone around the absorption levels. What it gives you, it gives you quick reversals. Not necessarily it has to be a major top for the day, or not necessarily it has to be a major bottom for the day. But what it gives you is like it gives you an instant trading opportunity. That evidence is very, very important. And absorption happens in many locations. If not in Nifty, it will be happening in Bank Nifty. If not in Bank Nifty, it will be happening in Infi or Reliance, ICICI. Somewhere this absorption will be always keep on happening. Right? So despite high delta and there is no progress, that is more of an absorption. And that is what it leads to a concept called trapped buyer, trapped seller, right? So where to measure the absorption? That's what it matters. So absorption can happen at opening bar. We'll not look into absorption because opening bar always volumes are going to be higher. So it is very difficult to differentiate whether an absorption is happening at the opening bar or not. I prefer to look into absorption anything other than an opening bar. Plus, if the location of the bar also matters to me. If it is happening at a fresh day high or it is happening at a fresh day low, I will be interested. So means, for example, imagine the market has been swinging back and forth, like back and forth. So if it is happening at a fresh day low, definitely I'll be interested around these levels. Is there any absorptions are happening or not? I would like to see, is there any absorption is happening around those levels or not? I would like to see around those levels. I would like to see if there are any absorption is happening or not. If it is absorption is happening, that low will be defended, and the subsequently price will start moving, trying to move on the opposite direction by breaking the nearest bar highs, or even if it is an inside bar, the inside bar high would have been taken out. And likewise on the upside also, we can see similar absorption, whether it is happening or not. So those are something that we tend to look around. Very importantly, we'll be looking, is there any such kind of absorption is happening or not? And sometimes the absorption will be happening at intermediate levels, intermediate swing lows, or even intermediate swing highs. You will be finding similar absorption levels, right? So similar absorption you will be able to find around those levels as well. So the thing is very clear. We should be monitoring absorption or even trapped buyer or trapped seller, particularly at fresh day low or at fresh day high. So fresh day high also it will be happening, fresh day high, or it can even happen around like intermediate swing high or intermediate swing low, intermediate swing high or lows. So most likely around VWAP levels, price will be breaking VWAP level, and you can find absorption. That these are like kind of routine patterns. Sometimes price will be breaking the VWAP only one tick, and then it gets rejected around the VWAP level. Sometimes it breaks casually, it breaks the VWAP, but it breaks very faster. And despite the fast price action, big volume activity, the absorption happens. So that is what the, again, I'll just have to go and show the last Friday's example itself. Right. So that is how the trapped buyer happens over here. Intermediate. This is more of an intermediate. But I can show you a couple of examples. I think probably a couple of days back we had an absorption, I think. If I could have seen this. This is more of a seller absorption. So big volume activity, 320. Big negative activity, selling pressure. But despite that, the buyers are getting absorbed over here. Kind of a trapped seller over here. That's a kind of a trapped seller. Slightly an heavy stop loss, but price action is attempting to get back up. So generally, we will be focusing towards the VWAP levels. So the VWAP level is what's supposed to be the focus, but then price got very closer to that. Nothing much happened later on, right? But if you had seen that the location where it is happening, it was happening at a fresh day low, and you can find like the delta activity is also higher. Not necessarily delta has to be higher. Usually delta will be higher, volume will be higher, single price volume will also be higher, but despite that, the price action stops and it will be reversing from there, right? So that's one form of an absorption. And absorptions are like kind of very common theme, I would say. If you ask me this one, so this is not absorption. This is like kind of an genuine buying activity. You see that big selling pressure, right? So selling pressure is there, but despite that, the buyers are getting serious at the day low itself, despite having big negative delta. I mean, not big negative, but regular delta, regular volume. The buyers are getting serious over here all of a sudden at the fresh lows. This is not trapped seller or something like that, buyers are really intelligent over here. Buyers are aggressively coming and taking that quick opportunity. It doesn't matter it's not necessarily it has to be a major top or major bottom for the day. It can be, but not necessarily it has to be. But what it gives is like, it gives you a quick evidence-based setup is what it can give you. It can give you a quick long opportunity is what you can find over here. And stops itself, like you have to keep your stop just one TPO down below that. So 9 and 0, right? So you have to keep your stops maybe one TPO down below that. That's where you have to keep. I mark this level. So even one TPO, if it's gonna break, the trade is done. But this is where people get confused. Price is coming into the zone, what I should do. So stop is a stop, right? Once the stop is placed, no matter what, you have to manage the trade setups. You should not be having any opinion. This is where people frame opinions. Oh, I think price is coming down. I think another 3 points only. Price will definitely take it down. Yeah. If it's okay. If it is taking it down, it's okay. Like you're gonna lose another extra 2 more points. But if it is not gonna take, right? That market does many other times, particularly in order flow. If you're watching very routinely, right, you will be seeing that kind of things. Like very many times price comes back very closer to those levels, sometimes even exactly coming and matching, but still the stop loss will not be taken out by one TPO and price reverses from there, right? So what many traders they try to do is like price comes very closer to their stops and they will think that the stop loss is going to hit. The fear of hitting the stop loss is the real enemy for the order flow trader, right? So if you are trading order flow, uh, taking and strict stop loss is something that you have to practice. What else can happen? Like extra another 2 more points is what is going to happen. If it is not going to hit, that is what it can give you a better risk reward ratio. So here it went towards the VWAP level, the chocolate color line. Whatever you're seeing is the VWAP levels. So that's how the absorption looks like. And trapped buyer and trapped seller, as you know, right? So who is a trapped buyer and who is a trapped seller? If you ask me, the buyer comes up with crazy aggressiveness. Sometimes it may even form in the form of imbalances. But despite that, the trend reverses, right? And why, if you're finding trapped orders, what you have to do is like maybe a good place to book your profits. If it is happening in this, you're already holding a trade and the price is moving in your favor and all of a sudden you're seeing a trapped activity. You can consider looking for an, either you can, number one thing, you can look for a trading opportunity to reverse, trend reversal opportunity you can find. If you are already holding a position, you can use that as a partial profit or complete profit booking point you can consider over there. So here is a simple stop run mechanics. Where the stop run usually happens, if you ask me, usually stop runs happens around liquidity zones, right? So stops means if at all a stop is triggering means that means there has been some sort of a limit order, resting limit order is there. Usually above highs, lows, or matching highs, matching lows, or most likely around consolidation ranges. So these are the zones that you'll be finding a stop trigger. So for example, you can find like the stops has been here, the stop is getting triggered, right? That's a stop run has been happening. But after that, you can see like there's a small mild pullback is happening in the markets. Many times you can find that high intensity zones where the resting limit orders are there. Usually it tend to break down with an aggressive stops. So I'll try to explain like how the aggressive stops usually happens in the markets. Number one way the stop run usually happens when market is trading in a consolidation zone, right? So market will be keep on trading in this zone for some time, either intraday or positional also, and all of a sudden it breaks, but then nothing happens. Slowly it start dropping down, and then it get back into the range. So that's how the majority of the stop run happens like this. The continuation is very rare. If at all, if there's a continuation, you'll be finding a slightly different pattern. You'll be finding more aggressive context over there. And some instances, what it will be happening is, let's say for example, on the downside, the price will be trying to move on the downside, casual markets, but all of a sudden you'll be finding like sudden crash and then a crash, a quick crash, and then it stops there and it'll be start reversing from there. These are like very common patterns where you can find mostly emotional traders, they get into a trap. Emotional traders. So that's why these are the places you should avoid taking fresh trades after a serious crash happened in the markets. Many a times you can be a late laggard trader. Generally, laggard traders, they come and trade around those levels. Laggard buyers, because laggard buyers or sellers, right, they need confirmations. So they want some breakout trading. So laggard buyers generally get caught around those levels, and laggard sellers as well. So these are the places. If you're already holding a trade, it's fine. But if trying to take a fresh shot over here, your winning chances are probably anywhere around 15 to 25% chances that price is further likely to move from there. So means, yes, you may sometimes you may get a jackpot. That's like out of 10 trades, maybe 1 or 2 trades you may be hitting a jackpot, but remaining 8 times it's gonna end up like an deep punishment for taking a trades around those levels, right? Sometimes it can be a major bottom, major top. Reversals will be very quick, swift. Maybe the jackpot will be on the other side most of the times, 8 times, right? So it gives a crazy feeling. It gives a lot of, I would say, like tempting to short the markets because the tempo will be very high. But despite that, what happens is like despite the stop run, which is what it happened last Friday also, it feels very emotional to carry forward. You can only, it's a kind of a material which is good to talk after market hours. But during the live markets, you try to, once the crash is done and you try to take a short trade over here, the chances that you end up making money is like probably like you're trading against the market odds, right? So you're thinking that the breakout is going to be succeeding, but the winning chances are like probably 15 to 25, even less than that. I'll not even would like to say even 20%. After that kind of attempt, the chances are like even 20% only. Why it is happening? If you ask me, I would like to ask a very simple question, maybe a thought-provoking question. How long FIs has been selling? Anybody? Like how long? We've been keep on seeing like FIs has been keep on selling for a quite long time, right? How long they've been keep on selling? Since 2024. That's what Guru is saying. Is that right? Since 2024? How about 2022, 2023? Maybe we'll go to money control. I don't know money control has an activity or not, but I don't know whether they have a yearly figures or not, but definitely they have monthly figures. Let's take 2022 to December 2022. Mostly they've been selling in the markets, right? So you can see like aggressive selling has been there. 2022. Not just 2022, 2023 also the same thing continued. 2023, 2024, 2025. They've been keep on selling majority of the levels. At least this place also they have been a net seller, but not very aggressive. 2023, but 2024, yes, they increased the intensity. All those Jane Street kind of issues also happened over there. The intensity of the selling was quite high. And 2025, right? 2025, if you would have seen that, again a crazy selling pressure, but still market was hitting all-time high. And 2026 also, to some extent, they started selling in Jan, right? In Jan, they've been a like crazy amount of selling. But if you see from the probability perspective, FI is selling and market is also crashing for the next 3 months, or maybe like next 6 months, the probability is like only 8%, less than 8%, only 8%. Despite FI keep on selling since 2021 onwards. So I think 2021 also there have been a sellers. Only 2020 that turns out to be a net buyers. 2021 to some extent they are net buyers, but after I think around May or somewhere they started getting into selling. You can see like they've been continuously keep on selling during the month of 2020. 2021 they've been a seller. 2022 they've been a seller. 2023 they've been a seller. 2024 also, I mean 2023 like mild selling, but 2024 there has been a seller. 2025 they are seller. But still market has been moved on the positive side. So what does that means is, yes, temporarily if the FIs has been selling, yes, the market has been going down. So maybe let's say this month they are selling, yes, market went down. But that doesn't mean like this month also selling, next month also they're gonna sell and market will again go down. Not necessarily, there is no real evidence there. And there is no real evidence that this month they are selling. So what are the chances that next 6 months market is likely to go down? Hardly 8%. Right? So they know that if I can know that FIs also, they know that selling will not bring the market down. Liquidating their positions aggressively, yes, it goes down, but what is also happening is like DI is also equally competing. So probably the impact is largely minimized in the markets. Selling pressure has been there, I'm not denying that, but the intensity of the selling pressure has been largely minimized. So the point why I'm trying to explain here is there are many times traders, they see aggressive price action and they tend to take extreme bets, particularly at these kind of levels when they know that stop run is happening. Despite knowing many times it's not a good trade location, people go and bet on the direction there, right? So rather betting on the direction after the stop run, once the stop run is done, who is coming and participating? Is that traders are getting into a trap, or after the stop run is done, is back-to-back COTs are increasing? So that makes sense to see some sort of evidence to take a trading opportunity around those levels. So that is what it makes a trader more objective rather than what he want to see. So many people, they want to see when price action is crazily going like this, they want to see that price, they want to go further up. right? But does that the market does? Absolutely no, right? Market tend to rotate many at times. So those are the good locations you should be really active to understand. Once the stop run is happening, you have to pay very close attention around those levels, right? More close attention, you're gonna see very reasonable trading opportunity you can find around those levels to play the quick trend reversals with very tight stop loss. Of course, stop loss will be there, right? If you're playing order flow, definitely you have to play with stop loss. Very tight stops most of the times. I mean, there is a small promo here. We are doing an almost 84 plus hours of intensive live training on market profile, order flow, and VSA, right? The whole idea is to make you understand the market profile concepts and order flow in a very detailed fashion. Multiple examples that we will be talking throughout the series. I would say like the content will be like 60% of the content will be market profile, 30% will be from order flow, because both market profile and order flow, right, they both use concepts like auction market theory. So both go hand in hand. There are places you'll be learning how to combine market profile and order flow, market profile for context and order flow for timing the setups. You can also use order flow as an independent tool also. You can also combine order flow with market profile as well. So throughout the series, you'll be learning how to combine market profile and order flow. And volume spread analysis. Yes, I would say like 10% of the content will be from VSA. And apart from that, you will also get to know how to do an real-time screen time experience, how to gain real-time screen time experience. That's definitely you'll be learning from there, right? Anyways, coming back to the context. So if you would have seen order flow tools, majority of order flow tools, like here in this case, Bell order flow. So they have this table. So this table here can be controlled from the top menu bar table over here. Even last time also we talked about that. So in the table section, I prefer to keep only the session letter just to see what market profile is learning. So usually if it is Indian market, letter A to letter M, the letter M will be the last letter. Every half an hour it generates a letter. Like, so what market profile letter is going on? So I know that if it is like K period means, so probably we are nearing last 1 hour of the markets, right? Or mid of the day, or are we at the start of the timings? If it's C period means what time is running on. So it gives you an idea. So we'll be more trained on those letters to get an idea like what letter, oh, okay, J period is going on now. So that means mid of the day. And delta, cumulative delta, and volume. These are the three important values that I prefer to keep. And I keep bid and ask imbalance. And the imbalance level I prefer to keep at like 5 times. Earlier I tried with 10 times, but now I narrow down to like 5 times, right? So 5 times imbalance is what I prefer to keep to identify stacked imbalance also. Or to identify any momentum activity, we use the same 5 times imbalance for stocks as well, for indices also, right? And at the extreme left, you will be finding this volume profile over here. And the chocolate color brown lines, they are nothing but standard deviation. I mean, VWAP levels, which is surrounded by +1 and -1 standard deviation. The blue lines are plus and -1 standard deviation levels. I generally don't focus on plus or -1 standard deviation levels, but majority of the time I'll be having an idea where the VWAP levels are getting traded. Right? That is something which is very critical from an intraday standpoint, because many times VWAPs are potential target destination. Sometimes around VWAP level, you can expect trend reversals also, right? Or in a consolidating markets, you'll be finding like more congested price action around VWAP levels. You get to know what kind of day it is, right? Again, intraday volume profile. Even intraday volume profile also, it gives the bifurcation of how much buyers, how much sellers at each and every price level. It gives you those intraday profile activity. These are like real traded quantity at each and every price level. And at times you'll be able to find the volume clusters also. So volume cluster is something which is inevitable in an increased volatile markets, particularly when the volatility in the markets are rising, right? You can find the volume clusters are going to be very common. It also provides some very interesting trading opportunities. And apart from that, you can also use Bell order flow tools to plot various things. Like it can plot stacked momentum zones, volume cluster zones, volume commitment zones. Maybe I'll show you some of the list of zones. It's very difficult to show each and every zones, but I can show you the list of settings which they do have. So there is an MR alert is there, which is like kind of a momentum reversal activity to identify one form of an trend reversal setups. And then there is a TR reversal is there. TR itself like trend reversal. It's kind of a multi-time frame alert. We had spoken about in Bell TPO sessions many times. TR alert is like kind of a Bell TPO proprietary. SH alert currently it is in beta. I don't use that. Unfinished auction can be a very potential zones. You can enable it or disable it. It provides an potential levels to trail your stop loss. Right? That's what I prefer to use. We use something called back-to-back unfinished auction zones. This is very beneficial, particularly in strong volatile markets. Unfinished auctions are very powerful setups. Then we have stacked imbalance. Stacked imbalance have very lot of use cases. I prefer to use 3-minute time frame for routine trading setups, the stacked imbalance. And then volume cluster activity to spot high density volume clusters. So one sort of a commitment in the markets. And there's also a commitment alert, big delta commitment alert, back-to-back commitment levels. So those commitment alerts can be enabled. Right. So these are some of the setups which you can find in Bell order flow settings. I think many of you guys would have been already familiar with these kind of setups. For the people who are very new to that, they can go back and explore about these setups. Very interesting zones. All right, so let me say thank you for coming by and attending the session.